And again, Thursday night training is on the way, on the way, on the way. As I mentioned just now, if there are any pairs that you want me to look at, any questions, any thoughts or concerns about what's happening this week, and or pairs that you've been in, this is the time that we can look at that together. So with that, I'm going to share my screen, and we're gonna go ahead on and get that going. Bear with me one moment. Where are we? Can everybody see the screen? Okay, let me see. I gotta play with this thing. I try not to have it on all day today because I noticed, with MT4, well, with my computer, if I have it on like 2 consecutive days, I start to get like this little lagging thing going on. So right now, I'm gonna pull that up and share the screen. Where are you? Where are you? What in the world? Share screen. I'm like, don't be playing around now. Don't be playing around. Okay, can everybody see my screen now? Okay. Okay, awesome, awesome stuff. All right, thank you, thank you. Okay. All right, so what I'm going to do at this time, before I talk about what I want to share with you all today, let's talk about some pairs that you all may have any questions about, any pairs that you all are in or was in thus far this week that that you have question about, and to do something that you didn't expect it to do, that kind of thing. Any of those experiences thus far? I heard somebody. Or maybe not. I don't know. It sounds faint. I don't know if you are talking to me. Okay, I'm gonna stay in the chat so I can see what's happening here. Okay, so I don't see anything. I don't see anything now. I don't know. Is anyone trading? Has anyone been trading this week? Has anyone been trading this week? You all can unmute and we can talk. We're gonna talk about it.
I've been trading
trading this week. Say again.
Oh, I've been trading the USD.
Oh, okay. Yeah,
I like that one.
And who's this? Is this Doreen?
Yes, it is.
Hey there, Doreen. Yeah,
Janice,
I love USD. How has that been working for you this week?
Oh, very well. Every time it kicks me out with profit, I get right back in.
Come on now. That's what we do. That's what we do. That's pretty awesome. AUD is definitely one of those smooth sailing type of pairs. They're calm, sensitive. And what I noticed, I've done extensive back testing on USD in particular. That's one of my pairs. And it really does respect the 50 pretty decently. Now, sometimes it will, break it, but it rallies back up. It's not typically a deep pullback from the arrows. So that's a good thing. Have you been using the trading plan for your entries using the with this pair?
Yes and no.
Okay.
To get in, yes, but then I mean, I surpassed the 20 pips, and then I mentally say, okay, I'm out, so I let it ride on up.
Right.
Because I'm pretty much I'm trying to get used to that because I want to use it as like you say, for retirement, starting off slow. So I want to stack as many as I can of those since I'm starting to get used to that pair.
Awesome. Yeah, I think that you're gonna have great success with it, and not really any pair, because any pair requires you to study it, right?
Yes.
You want to study it and back test it, and then be consistent with that pair.
Mhm.
But it's pivotal because, like you said, you using it for entry, which helps greatly. And then most often, what you're going to find, not only with RUSD, but in general, most often what you're going to find is that you're going to surpass your 20, right? You're going to
Yes,
surpass your 20. At least you know if you don't, if price seems to be struggling, you know you can get your 20 and be done.
definitely, definitely.
You know, you can get your 20 and be done. One of the things that I do encourage as well is to do a trail and stop.
Oh, yes. The only thing about that is that
Uh-huh.
I'm with IG. I don't know if you're familiar with that one or not, but they don't necessarily have a trailing stop. That's why I'm comfortable with the odd USD because um, the way it moves, you know, if even if I lose a little, you can gain it back so much quicker. But
Absolutely.
yeah, there's no really no. I have to manually do it. So.
Really? I was
Mhm.
under the impression that the trail and stop was a MT4 function.
Yeah, the thing is,
Well, it's still with
oh,
your
is it?
broker though.
Oh,
Yeah.
but you know what? Actually, IG they do utilize MT4, but for some reason it doesn't work as well. But I like their platform, so I hadn't really complained. But when I probably will say something about it, but I really like their platform.
Well, that's good because overall, if it's working for you,
Oh yes. Hmm.
that's all that matters. I mentioned the trail and stop though, because of course that is an option,
Hmm.
but primarily, you know, most people are a little uncomfortable with the large risk to reward when we're using the arrows, right, for your stop loss. So we're
Okay.
only going for 20 pips, but
Right.
the arrow that you use to base your stop loss may be 70 pips from your entry.
Mm-hmm.
And so that, and I get it, I get it. But here's the thing with the trading plan, though the risk to reward is much greater,
Hmm.
the reward to the risk is greater. And I know that sounds kind of mumbo
Hmm.
jumbo, but you're more likely to hit your take profit than you will that stop loss.
That is true on that. Yeah, that's what I really like about it. You're
Right.
so right about that.
And
Mm,
so that's why I'm comfortable, you know, with it because I know I'm not going to hit that stop loss. And I
exactly.
always say this as well that at any point in time, this your trade, your money, you are in control. And if at any point in time you feel uncomfortable, just just get out. But the way that the trading plan is set up, you have a far more greater chance of profiting than you do hitting the stop loss.
Mm-hmm.
Now,
Yeah.
the other thing as well is that is for the first trade after the alert go off and you get
Right.
in. The after that profit has been made, you use the arrows, for instance, for that stop loss. Then the next trade, because now you're gonna ride that trend,
Mm-hmm.
right? You don't have to continue to put in alerts. Um, let's try to find some content. Okay, so like right in here, the alert would have gone off somewhere around in here. So let's just say you got in, right? And you made your money. Obviously, you made your money, right?
Mm-hmm.
I didn't go over
Hmm.
the rest of the confirmations. I'm just trying to make this point.
Right.
Now, the next day, hey, we got an uptrend to capitalize on.
Mm-hmm.
And it's just a matter of wash, rinse, repeat at that point.
Right.
We're
Mm-hmm.
just looking for our bullish big arrow. I'm
Mm-hmm.
sorry, bullish
Bullish.
candle
Right.
that's closed above the 50. We look down at our MACD, make sure that we're still in bullish territory, right? And then we follow the rest of our confirmations. But as far as the stop loss, now I'm not gonna keep it at this level for my first position. I'm gonna steadily move it up as um, as I move up in my trade, as we continue this uptrend.
Mm-hmm.
I'm going to be moving my stop loss as well. And you can use the support dots as your bridge, your indicator as to where to put it. So that way you're not going to keep, because the longer you're in the trade going in this uptrend, the wider that risk to reward becomes. So you want to continue to move it up with you. Use the 50 moving average as well as another benchmark. So make sure it's below that as
Mm-hmm.
you continue to move up. So that's just an option for everybody here who may not use the trail and stop. You can use that as an option as well.
Mm-hmm.
Does that make sense?
It sure does. What correlated pair would go with that USD.
With RUSD,
Hmm.
you know what? I have my cheat sheet. I got cheat sheets all over the place.
Yeah, I used to have one too.
Listen, because there be so much. I'm like, no, we're gonna have what I need right in front of me. So RUSD, actually, that is one of the major pairs too, which is a benefit
Right,
because you got your major and minor pairs. So
right.
the RUSD is a major pair. It's amongst the 7 largest
Hmm.
traded pairs globally.
Right.
And so with that, you're going to get nice movement
Hmm.
out of it. But the correlation pairs, the positive correlation pairs that move with it is AJ, EJ, and EU.
Okay.
Now, as I mentioned before, this only pertains to the trend, not so much the depth of the trend.
Right.
So you can be up in this area of your trend on USD,
Hmm.
but on EU, well, we're not at the and let me use this as an example. Yeah, because that's important to recognize as well. So on RUSD, we're looking for a bearish move eventually, right?
Right.
So when we go to EU, we should be bearish at EU. So we're bearish at EU.
Hmm.
And this is any time frame, it's a positive correlation. And how you trade those is, I mean, if you're buying AUD USD, you can buy Euro USD.
Right.
However, in this case, they're basically mirroring each other as far as
Exactly.
the depth of the trend, but that's not always the case. So you could be down in this area of the trend on Euro USD, but up here somewhere on odd USD. So
Right.
it only pertains to the trend in and of itself. But you can, trade the same. Now, one thing I caution people is that you don't want to be top heavy in one position.
Exactly.
You don't, especially your positive correlated pairs, you don't want to be buying all 3 of them or selling all 3 of them, because if something happens in the news, for instance, that affects one of those, it will
Right.
likely affect all of them. So if it has a negative effect, then you got a negative effect on all your trades. So I like to do a balance of positive and negative. And the
Exactly.
negative correlation to our USD is UCAD and Euro odd. So those like UCAD should be bullish. UCAD should be bullish. See?
Hmm.
Bullish. And then Euro odd should be bullish as well. So these just give you those little extra tidbits. It's like pieces of a puzzle. We just learn to put the pieces in the right place so that we can look at the big picture.
Hmm. Now,
Yeah.
when you were on the USD, you said it was bullish. I mean, bearish, or did you not on
Yes.
the odd USD? Yeah. So would you consider it that? And I mean, I don't usually name it until it has the 3 arrows. So would you actually go short on that if everything met your expectations? Because you
Yeah, it
only
met
have
my expectations, but it don't. Because right now we're still bullish.
exactly. Okay, I thought you said we were. Okay, I misheard you then.
Yeah,
Okay,
yeah. Right now we're still bullish. It needs to meet
exactly.
all of our standards.
Okay.
And so yeah, it's still bullish
Hmm.
until we, get the triples and the other confirmations are met. Now the triples in and of itself indicates that the trend is underway. But what I found, and which was the reason why I created the trading plan, is because the triple arrows do not indicate when the trend actually reversed. And that's really key, because even if we have our triples, and you've all seen in plenty of times where you can have the triple, but we still above this 50. See, without the 50, you don't have that extra insight,
Right.
because above the 50 or below tells you where the trend is. So oftentimes you can have your triple arrows, but still be above the 50 for a sale. What that says is we have not actually penetrated that trend. We haven't actually began the trend. We're still dominantly in an uptrend, even with the triples. And that is the reason why most often those in the community, the triple arrow community, when they get in, they see the triples, they go up 1 or 2 time frames for directional support, and they take the trade. And then once they take the trade, they go straight into drawdown. The reason being is because oftentimes, 9 times out of 10, when the triple arrows appear, you're still in that previous trend's territory.
Right.
And that's the total reason why. Now, the MACD is pivotal to our plan because the MACD cross, the 0 line and above or below, when it crossed, that is the indication that the trend is taking place. That is a trend reversal every time it crosses. Now, the length of the trend varies, of course, we can't control that, but it tells us, okay, we're in the downtrend, we're in an uptrend. And then we coincide that with everything else in our trading plan. Okay. And that is the reason why once, you know, it crosses over, you know, our triple arrows are there, it's below the 50. Now you're in a stronger bearish trend. Now you're in a stronger bearish trend. And you can actually, you know, you can go back any pair you decide, whenever you have that big arrow, right? Like for instance, right here, okay, the triples came, and this just so happens to somewhat line up because we had the crossover, didn't quite meet that yet, but just based on the triples, the triple came in and it solidified when this candle closed though, because it, you know, it lined up. So that was the first indication, but we don't have the crossover yet. So we want to wait for that. But most often you'll find that it always comes, the triple will come out of territory. I like to call it out of territory. So we got a bearish move here. We got our triples here, but guess what? We're still in bullish territory. Why? Because we're above the 50. We're above the 50. So it's not a low risk, it's not a high risk trade. I would say it's moderate, right? It's moderate, but I like to trade in the territory because it strengthens, you know, it strengthens your position to profit. So that's why we wait for it to cross the 50 along with the cross of the MACD.
Okay. Now, can you, what do, I feel like we're just having a conversation. I don't mean to hog this thing, but.
No, you're fine. Anybody else that want to jump in there, more than welcome.
Okay, the red arrows and the green arrows, what do they represent?
The small arrows?
Yes.
Okay. Yeah, so these are more or less predictors, if you will. Because they're predictive indicator. This whole indicator system, you know, is predictive and it's lagging. So it's like leading and lagging indicators is that. So what the small arrows do, one is a stabilizer and one is a confirmation. And so the yellow arrow is your stabilizer and your little arrow is the confirmation. And them together basically says that, okay, the trend is, we have a stronger trend now, moving in that direction. It just does not indicate that it actually reversed. That's the thing. It says that the trend is stronger now in this area, because if you look at the big arrow and you had your small arrow, but you didn't have your stabilizer, your yellow arrow, right? And then what you had your pullback, it still was not stable yet as far as the trend goes. Still wasn't stable yet. Once you get your stabilizer and your small arrow, then it is. Now in this case, and if I'm going too fast, please stop me, anybody. But in this case, we did get the small arrow over here. So even if it didn't come over here, it would have still been fine. Once this stabilizer, that would have indicated that, okay, we're about to get some momentum going in the direction of the trend. Now, once the trend on the MACD, once the MACD crosses over, now the trend is actually reversed. It actually reversed. Now, every pair has their movement behavior, you know, no matter what, you're going to have pullbacks, ups and downs. and that kind of thing. But what it indicates is that we're in momentum. Another benefit to that is not all the time, but it's highly unlikely at this point that you're going to have a repaint situation. Most of the time, and again, it's hard to do it after the fact though, but
Right.
most of the time when you have a repaint situation, price is still relatively close to that big arrow.
Mm-hmm.
But when you start getting into the momentum of your trend, it becomes less likely that you'll have a repaint.
Okay.
And I say less likely because anything can happen in the market, but just overall is, is less likely to happen.
Right. I believe last week you said the yellow was the momentum, basically.
Well, basically, when both of them line up together, that's
Okay.
when you have momentum pushing.
Mm-hmm. Okay.
So you can have your little here and your yellow here. You may not have the same push, the same momentum, the same value, but when you see them populate relatively close or on top of each other, yeah, you're gonna have some momentum. Like right here, you got a nice little push up. You got a nice little push down. You'll notice that when it's far apart, you may not have that.
Mm-hmm.
And again, and you may have it. It's just more likely that when it's together, you're gonna have some. Yeah. Okay. Because these two arrows together solidifies the trend, if you will.
Mm-hmm.
Yeah. Now we talked about in most of your one-on-ones, initial sessions with me, we talked about the price movement and how price move. Mm-hmm. And that's real important to know as well. The impulse, the correction, and the continuation. That's all price does. It goes down, it goes up, it goes back down. And so it's important to know what stage is price in, right? What stage is it in? Because if we're in a correction and we're buying, we're selling, then we know that we have to wait until until it gets to a continuation. Now, one of the things that we look for in that is, one, you can look for your small arrows. You can look for your small arrows because it's going to give you the most push down or up. So let's say you're at this point here and you already had this impulse. So you had that impulsive move down and you had some back and forth, and then you had, basically a correction right here, right? And you had a little pullback, a little continuation, not much movement. So, and here's the thing. When you come, let's say for instance, you come to the market and you're at this point, right? You're always looking left for direction. As far as the small arrows go, that's very pivotal in indicating to you where the volume is currently. So if you're looking for a re-entry, for a continuation, and you're at this point, let's say you're at this point right here, you look left, you have bullish small arrows, which tells you that we're still in a bullish momentum or correction. So you don't want to get in, and obviously we wouldn't have done that on the bearish candle. Well, yeah, on the bearish candle because we're selling, but you don't want to take that because guess what? We got two small bullish arrows right the immediate left. What that indicates is that we still have some bullish pressure here. It's not until we regain bearish pressure that you're going to begin to see your small bearish arrows. And when they come, especially together, you're going to have more of a push down. I hope that makes sense. Mm-hmm. Does anybody have any questions about that thus far? Just understanding how to read the arrows and what they mean and how you can use that as another confirmation, because everything on the triple arrow system tells a story. Okay, so Elijah talked about the news and it is not on the trading plan. Right, okay. So we always want to check the news. Always want to check the news. Rule of thumb, and because the updated trading plan should have that on there. I'll double check. If not, I'll certainly insert that. Most would say 2 hours, but I typically do an hour before or an hour after. That's what I usually do, an hour before or an hour after. Now, if we have a lot of news or major news, like throughout the week, at least 3 days out of the 5-day trading week, that may be a time that I sit out because the market is just going to be in an unrest if you have major news 3 days out of the week, out of the 5-day period, like this week, for instance. NFP week, that's a major news, but the news that took place prior to that also has an impact. So when you look at that collectively, it just makes for very unstable, trading. And as you can see, I don't know if you all have been, kind of looking over certain pairs, but there was way more repainting of various pairs this week. A lot of repainting. So I did, which one was that? It was Euro odd, because I pointed out one and I wanted to use that as an example today. Was it Euro odd? No, it was odd CAD. It was odd CAD. Odd CAD. Oh, it's odd CAD. Yeah, it was odd CAD. Okay, that's what it was. I don't know what happened to my drawing, but I outlined it. The big arrow, the bearish big arrow was right here. It populated right here early in the week. And as you can see, it repainted all the way here. Then it went here first, and then it went there. That's a wide distance, right? That's a wide distance. But you'll find most of them did that, especially the JPYs. Most of the JPYs did that. And the reason being is because when you look at the strength meter, and I did put that in the group as well, but when you look at the strength meter, the JPYs were at the lowest volume for most of the week, which simultaneously, whatever you're trading it against is going to be bullish because there's no volume for the JPY. So the bullish is going to be much stronger. And because of that, it created higher highs and it just kept repainting the arrow. It kept repainting the arrow. Pretty much all of your JPYs repainted this week. And GJ repainted. So that's over here, that went over there, right? And it's because of that. The volume for JPY is just very low. So that's this week. But because of that, next week should be awesome trading any of the JPYs because they're all pretty much just sitting here waiting for the news to break. That's what they're doing. They're just sitting here waiting for the news to break. Anytime that we have, NFP is always that, sitting on the fence to see what the economic numbers are because that does impact the other global currencies also. And so that's why you have a lot of consolidation in the market and just holding the position. Just holding the position. Not a lot of movement, but it's a good setup for next week. Have you all noticed that though? With the JPY pairs, look, they're all pretty much hovering in the same area. Yep, see, same area. But these were repaints. These alerts is like nerve-wracking for real. But they're repaints. They're repaints. Big arrow was over here, right? And it repaint. So that's what you can look forward to on next week. Same thing. That's the reason for that. Okay. Hold on one moment here. Any questions before I move on? Thanks a lot, Doreen.
You're welcome.
GJ and UJ. Yeah. That's the thing. Now, and that was another one too. I don't know my markings. Let's go to GJ. So, so were you in a sale on GJ based on where the arrow was prior? It looks like it was around in this area here, probably around in here. Were you going for a sale? Yep. Yeah. So with the sale, okay, now here's the thing though. Here's the thing. All right. So let's look at that one. Let's make this, it's hard when it already happened, but we know that it was either around in this area or this area. Anywhere in this area, it wouldn't have mattered anyway because it didn't line up with the trading plan. So let's say that it was right here. This GJ, yeah. Let's say, and Will, you can come on and guide me as to, you know, if I'm off on this, because it's either this candle or this candle that you would have executed on based on the trading plan. But I do want to point out something. Now, based on the trading plan, we what? We wait for our alert, right? We wait for the MACD to cross our center line. Now, when I say cross, I don't mean it needs to cross all the way above. It needs to at least begin a slight penetration on our 0-0 line, right? Once we get that alert, then we come back to the market. So based on the MACD, somewhere around in here, and that's consolidation. So somewhere around in here is where that would have gone off. So let's look at the only two possible candles that would have been looked at in this scenario would have been this one here and this one here. So let's see. So now with this candle right here, we can clearly see that this would not have met our criteria per the trading plan. Though it did close below the 50, but it's still a little body that closed below the 50. That in itself would have gave me reason to drop down to the 15-minute because I would need to see more clear now what is likely to happen. Even if these dots wasn't here, the mere fact that this candle, a little bit of the body closed below the 50 would have caused me to drop down to the 15-minute chart so that I can get a better clearing, a better idea of how much play I have. But in this case, it didn't meet our criteria anyway because we're right there, right? Only what, 3 pips or so. So we wouldn't have made a move here. The only other candle would have been this one because this is a doji. We don't act on the dojis. We wait for the next bearish candle, right? Hammers, dojis, we don't act on those. We wait for the next candle. So this candle came, right? And this one here, look, I want to make sure that we don't want to fudge anything. We want to just get it right at the close of the candle. We're right smack dead on this support dot. That should have stopped you right there. And that should have told you, nope, can't get in because I just hit a support. I just hit the floor. So what's likely to happen? It's likely to bounce me back up, just like a ball. And for extra confirmation, also you want to make sure to remember to look down at your MACD. Look and see what your MACD is doing. Now, remember, we don't see anything at the right of this area here on the MACD. So we only see that, you know, the left side. And this MACD looked kind of funky to me just from that standpoint. Let me put a shape on that. I need to figure out how to put the shade back on, but we'll work with it. We'll work with it. Okay, so the MACD, along with that candle, right? It don't look good. It's not clear. It's not clear. So these are things we just got to go some extra insight, and you know, we trade what we see. If it don't look right, if it doesn't look clear enough for you, just wait to the next candle to see what it's going to do, right? So that right there would tell me, I got a little bump. You see that little hump that came back up over the 0 line? That would have given me some pause too. That would have given me some pause too. So yeah, the fact that this sat right on my support, nothing else really matters at that point, right? We're not gonna take it. We're not gonna take it. Now, you can always drop down too. If you want extra confirmation, hey, drop down to the 15-minute. So put your vertical line on that candle, drop down to the 15-minute, and let's see if, and we use the same confirmations on the 15-minute, right? We're looking for the same thing. So here's our candle right there, okay? So we're gonna go put it at the close of the candle. We look left, we're looking for the clearing, right? 12 or more pips, we got 23 here, and we have 10 there, right? We got 10 there. And we have our MACD is in seller's territory. However, it is the MACD, which represents buyers, is on top of the signal, which represents sellers. So with that, plus the fact that, you know, we stopped on a support dot, I would have waited. Does that make sense?
Yeah, can you hear me?
Yes, I hear you.
Yeah, it makes sense, but on mine, I didn't have the support dots on the hour chart, and
Okay.
that's probably why. And I have the one, what's this stuff for today? I have the support dots, but the day before I didn't have no support dots, so that's why I took the trade, because it closed below the 50, but I didn't see no support dots.
So you saying these dots right here?
Right, that's
was
not on my
not
chart. Yeah, it's not on my chart now.
Oh, see, that's a glitch.
Yeah, so
because
that's
one
the
thing
reason why I took the trade.
about the support and resistance dots, they don't repaint, they don't move. Once it's solidified, it's done. That's it. Now this is historical data. So the historical data doesn't change. The only dots that change is in the motion of the candle, when the candle is still active and it's establishing or identifying, I should say, a resistance or support area. You'll see a dot appear, then it'll disappear. But that's based on the movement of the candle. Once it's solidified, that's it. Okay. So that's a glitch there, because you
because I'm not showing no support. I see how your chart look with support dots, and mine don't have no support dots from the days before.
And this is you on the hour chart?
Yep, I'm on the hour chart.
Yeah, that's not cool.
So that's the reason why I probably got stopped out, because I didn't see that once it closed.
Yeah, that is the reason. Yep. Because based on what you're saying, this would have been your area that you would have been looking at.
Wow.
Do you have these dots?
No, I don't even see those. I have one. I have a big long one, but that's like at the bottom. It's a very long one.
Okay, so now I need to ask this: how is your support and resistance dot set up? Is it current? Is it 4 hour?
Let me find out.
So we're gonna go to it. So let's right click and go to indicator list. Then go to support easy SR. Edit. This is how I have mine. I have mine set to current. So no matter what chart I'm on, those support and resistance dots represents that chart.
Wow, I never knew that.
I never knew that. That's on 4 hours.
Wow.
Oh, you want a 4 hour?
No, it shows 4 hours on my support dots.
That's why.
Wow.
Because you want an hour chart. Now I'm not saying that the 4 hour support resistance dots are not useful. We don't need that though. Like we really don't. I think the best thing is the current, because no matter where you are, those dots represents that time frame. Now you're going to get an accurate depiction of where price was in the past.
Wow, so now I see
our chart, you got a 4 hour dot. Those dots represent what happened 4 hours ago. You got a long way before you get to those dots.
Wow.
You see what I'm saying?
Yeah, I'm just now noticing that.
Yeah.
Wow.
So that's what it is. That's what it is. Okay.
Oh, so
now we know. Now we know.
Yeah. So when you use the current, so the colors change or they don't change, or
No,
because it's
you can determine the colors that you want. You can just go to colors and you can make it
right,
whatever color, thickness that you want. Now, some people like to have all of their time frames
right,
on the chart. I just think it's too busy and it's confusing for me, so I don't do that. But if you wanted to do that, you would just designate, like if you wanted 1 hour, designate whatever color you wanted that
right,
to be, save it, and then save that template, then go back in and do the same thing for the 4 hour and the daily if you want all of your dots on the chart.
right. And that's how I do mine because that's how I was taught. But I never even noticed current.
Oh yeah, you
Okay,
do current.
good. Okay,
Yeah, current is much easier, simpler. You don't got to try to figure nothing out. You know exactly what those dots mean, what they represent. That's why but now you know, so that won't happen again, because the main thing is that you looking at my chart, you can clearly see that you wouldn't have taken that trade.
Exactly. And now I understand why I was getting out of a lot of trades today.
Yeah,
So that
oh
makes
yeah,
sense.
that's right. Yeah, yeah.
Makes sense.
Oh yeah, I'm glad now that you're gonna be rocking and rolling now. So
Oh yeah, I'm rocking and rolling now.
we're gonna be good to go. Absolutely. And so the same thing probably apply to EJ. Because you said you were in EJ too.
Yeah, I was in EJ as well, and now I'm starting to see I see the support dots now. I didn't see those before.
Right. Okay. So we rolling. That's the main thing. And even, speaking of that, even when we lose a trade, I was always taught that you don't trade until you figure out why you lost that trade. Like, no matter how long it takes you. And that's important too, because if you don't know why you lost, you're bound to continue with that, right? And so, yeah, that was definitely something that you all could have learned. But just in general speaking, like it could have been like, oh man, I see what I did wrong. I didn't look at my MACD. My MACD, didn't show the support. Whatever the issue is, once you identify why you lost that trade, then you move on to the next trade. Now is a lesson. It's not a loss. You know what I mean?
Yeah, I understand that now.
yes.
Definitely.
Yeah. So what I want to do, anybody have any other questions before I move on? Okay. So now what I want to do, okay, so I was really contemplating this. I have to be honest. First of all, I didn't trade this week for a couple of reasons. One, it was just too much back and forth. I was monitoring the charts and I was seeing all this repainting. I'm like, it's just too much indecision and that kind of thing. And I don't like, when I see a big arrow, I like to be out my trades, right? So if I get in a position on the triples and our confirmation, I get out when a big arrow populates, even though at that time it's still in the previous trend, but I just like to get out because anything can happen at that point. Now I know I'm shaky, I'm risky at this point. So I just like to get out. But considering this week, with everything going on and all the indecision, I was like, my head really wasn't in it, to be real honest. And then, I'm not really one for news. Like, I don't watch the news because it's just freaking depressing, right? I mean, you got to stay on top of what's happening and things like that. But even when you try and not to watch things, you want to hear about stuff, right? So I just pretty much get what I get. That way I don't saturate myself with news, but it just was a downtrodden week for me. And so I decided that this wouldn't be a good time to trade. Like when my energy is not high, I don't trade. It's just a direct correlation with my clarity. So for that reason, those reasons, I didn't actually trade, but I did do some studying and some back testing. And so what I wanted to share with you all, and this is what I was contemplating, if because I don't want to confuse anything and I don't want to give mixed messages. I just really think that it's important to master one thing first. It just is, so that we can eliminate the hopping doing this and hopping doing that, and then we really not benefiting. But at the same time, I believe that it's really, really good to at least have two ways, two strategies that you can trade. You can always trade because lifestyles change, scheduling change in your life. These things happen, right? And it can impact your ability to trade the way that you know how. So I did decide that I wanted to encourage this other method of utilizing the triple arrow system. And I've talked about it in the past as well. So it's not confused. It doesn't confuse anything. It doesn't cancel out one or the other. It's just another way that you can have in your arsenal in the event that you can't trade for whatever reason. You can't be in the markets for whatever reason. You can still be making money, right? You can still be making money. And that is arrow to arrow. I mentioned that in the past, I've traded arrow to arrow. Most often I do it on like the 4 hour and a daily. So I'm really not watching it. I'm like, okay, whatever, I'll poke in there. But if you don't want to wait as long as it will take for you to get to the next arrow, big arrow, then certainly you can do the same thing on the hour chart. And so within a trading week, you could have, easily gotten 300, 400, 500 pips. And that's phenomenal in a trading week. You know what I mean? Just trading arrow to arrow. Now, if you do that, I always stress you want to make sure that you're under leveraged. You want to, because you're going to swing now, but you want to make sure you're under leveraged, and you want to make sure that it's the right pair as well. They're studying different pairs. I can make some suggestions. RUSD, hands down, would be my number one. That's the one that I like to use because it's steady, it's calm. You can clearly see like what it's doing. You know what I mean? So I like that. And also one other thing with that, I like to make sure that my my candle has closed above the 50. I still want to be in the territory, right? So close above the 50, and I'm in right motion, on my MACD. I don't really look at, I don't look at it at all. I don't consider the dots, the previous dots, when I'm trading arrow to arrow. It don't matter because I'm gonna be swinging it anyway. And then I execute, and then that's it. So the only thing that I recommend, if you decided to do that, is to make sure make sure you do not over leverage, just under leverage. Don't even, whatever, if you're trading 1 to 3% of your account balance, let's say for instance you're trading 2% on average, then when you swing like this, when you go arrow to arrow, just trade 1%, right? Because the compound effect is exponential. So there's no need to over leverage your account and risk blowing it, right? So you're gonna make really, really good money. And to be perfectly honest, not immediately when I got the triple arrows, but shortly thereafter, and I started figuring things out, this is really how I really, really grew my account, is arrow to arrow. And this week, and sometime I go back and forth with it, but this week, it hit me like, you need to just start doing arrow to arrow. Because honestly, my head wasn't in the charts, but I could have still been making money. You know what I mean? Because things happen, but you can still make money. So in this case here, what you would do is you'll follow the trading plan, except for the support resistance dots. Don't be concerned about that. We ain't trying to get 20 pips, right? We want to go the distance. And what I also do is I get out on the big arrow, the opposite big arrow. I don't wait for the triples to appear on that. I get out at that point and take the money and run. So, let's just say in this area right here, just at this point, you're at 170 pips, just at that point. But that's not even the end of the arrow, right? And this one ran a long time. Like my screen won't let me, there we go. So from this triple right here, just to give you an idea, right? Somewhere around there you got in. somewhere around there you got in, and let's say you got out right there. That's 863 pips. 863 pips. Now, how long would it have taken, right? That's the big question. And it varies on the hour. EJ, again, that's why the pair matters, that you are actually doing the hour to hour on. But so each one is a day. So let's make this quick, and we can do, that's the 5th of the 7th of May is where you would have gotten in on the 7th of May. And well, this is the 4th, right? Or you would have got out on, why is that down there? Okay, it's right here. So you would have got out this week, right? So basically a month, but you got 860 some odd pips, right? And that's just money. That's just money, just calculating, right? Did you have pullbacks? Yep, you have pullbacks, but because you're under leverage, you were good. Now the thing is, you would have gotten in like around in here. Price never came back down to this point. So you was in the blue the whole time for the most part, from what I can see. Yeah, you were in the blue.
Would you be opposed? I'm sorry.
No, you're fine. Go ahead.
Would you be opposed to doing that strategy on the 15-minute time frame?
Oh, absolutely. Yeah, I would, because the lower the time frame, the more unpredictable, the more back and forth movements, the less steady movements that you have, and you can clearly see it too.
Mm-hmm.
Yeah, the 15-minute, I only use that, and I personally think that the 15-minute and lower is only good for entry. Only good for entry if you want to use it for entry, but I wouldn't like do a strategy on there.
Okay, I was thinking more in terms of scalping on a 15.
Yeah, I mean, because when you talking about doing arrow to arrow on the 15,
right?
See, if you do arrow to arrow, it's not scalping, because there's a, it's going to take you some time to get to the next arrow, the next big arrow. So that really wouldn't be a scalping technique. You're actually, basing that strategy on the 15-minute movements. And it's just a little too erratic for me.
Okay.
Let's see here. Just a little too busy. You see all of this? All of that. No, I don't like that. I don't like that. And yeah, no, I would not. I just wouldn't recommend it. And another thing I look at too, and what I would suggest is, when you're determining the pair that you want to use for arrow to arrow, just monitor, back test how often that pair fell below the 50 or above, depending on your position. So if you're buying, how often and how far did the price fall below? In other words, how far it pulled back, and how often did that happen? That's another thing that you can determine if you want to use that pair. We fell below here. We fell below there. Now, granted, at this point in the game, you're still going to be a profit, right? But I like steady movements, right? I know it's not going to be a straight line up or down or what have you, but if it's a lot of breaking of the 50, that would be something I would have to weigh in on. I would have to weigh in on that. This is another reason why I just like the Aussie USD. It's steady. Now, I'm not saying they don't have pullbacks and such, but it's steady for the most part. Now, one of the cons with the USD is that it does consolidate more, that I see more than other pairs. It consolidates. So that's what I like to look at. But I'll take the steadiness over just that erratic behavior. So right here, and then here's the other thing I like about it is you have more volume in the Aussie pairs. These are exotic pairs. And for it to be an exotic, the spread is really not that bad. I have
exactly
Traders Way. Mm-hmm. So based on Traders Way, the spread is not bad at all for Aussie pair. Not at all. So let's see. So let's see right here. You would have got in on the triples. Triples came in right there. If I would have saw this resistance, I just can't help it. If I see a block, I'm gonna wait, right? Like, hey, let's just clear this area right here, right? And then you would have taken that up to the big arrow, and that is roughly 499 pips. 499 pips. And that would have been on the 18th of May. And it's 2 weeks basically, because it's what, the 4th? 2 weeks, look, not even a whole 2 weeks, I don't think. But yeah, basically 2 weeks. But that's good. That's good. Now what you would do is you got your arrow to arrow going, right? So that's money that's just clicking, that's rolling. Now what you want to do is each day you want to follow that trend and get your 20 pips. So you're compounding along the way. That's why there's no need to over leverage, because while in those 2 week periods you had a nice bullish run. So guess what? This day you're in the position. This day, what we're looking for, our confirmations, bullish candle, close above the 50. We're going to follow the rest of our confirmations. We get our 20 pips and we're out. The next day, same thing, follow the confirmation. So you're getting your 20 pips along the way on top of the arrow to arrow position that you're in. And this works, it's just a peace of mind. It really is. It's a peace of mind. And the only way that you would have a peace of mind, honestly, in trading, I don't care what style of trading that you're using, is if you don't over leverage your account. Anytime that we're nervous and we're anxious and we're just like frazzled, it's because we over leverage the account. The lot size is too big. The lot size is too big. I've been in trades in drawdown, and most would have said, well, what in the world? Why would you stay in that much drawdown? Because I wasn't over leveraged. I knew it wasn't going to blow my account, and it was going to turn around, at the highest possible pip of drawdown amount. I still would have been okay. Because you want to just grow. You want to grow in incrementally. You want to grow. Because once you get to, as you build your account, your lot size will grow. Now, this is the question I wanted to ask. Is everyone using the spreadsheet? Because that's a really, really good tool to use to help you with your leverage too, so that you won't over leverage your account. If not, I really recommend that. And what I also recommend is that whatever balance you start with, whatever that is in your account, just cut it in half on the spreadsheet. Trade it as if it was half that amount. That way now you just under leveraged yourself even more, protecting your capital while you're growing your account. Does that help? How y'all feel about the arrow to arrow?
I like it. Do you add to your positions at any time, or you just keep it at the same lot size or whatever?
Right, and that's a great question too, Doreen. When you're doing your 20 pips, that's when you want to do that. Like,
okay, good.
That's my big lot is on the 20 pips.
Okay.
Yeah, my big lot is on the 20 pips, because I know I'm swinging over here on the arrow to arrow, so I'm going to do a smaller lot size on that trade, and then I'm going to do a larger lot size. And all of this is still in accordance to your account balance. You still collectively don't want to over leverage it, but yeah, that's what I do, Doreen. I have a larger lot on the day-to-day money, and as you can see in this position here, you were good when you entered that trade. It never hit that area. It never hit that area. Now, when you're back testing, this is one of the effective ways of back testing. So first you have to identify the time that you want to trade. There should be some structure around when you're trading, so you don't feel like you have to always be bouncing in and out and that kind of thing. So once you decide the time that you want to trade, if it's 4 hours, say for instance, you say I'm going to trade the first 4 hours of New York or Asia or London or whatever. So now what you want to do is map out, identify those 4 hours. So I would go back at least a year, right? I would go back at least a year, and I would just identify those hours. I just identify it. And then, and you don't have to do it all in one day, or you can, it just depends, but let's say I'm going to trade in these hours, just GP. So I'm going to outline those hours a year back. And what you're looking for is to see how price reacted during that time frame, and based on your trading plan. And that's how you can determine if your trading plan is effective. And, if it's actually, or if the time frame that you're trading may need to be tweaked. If you see that you get more momentum, in a different time span, you might want to consider that time span. But that's what you really want to do, to learn how that pair moves. And that's why I feel confident about Aussie, is because it really respects this 50 overall. It really respects the 50. If it's a buy, it respects price, pretty much stays above, the 50. It don't do too many dips. And when it does dip, it was only 2 times in my back testing that I identified where price pulled all the way back down to where the initial triple arrows. 2 times in a year. So that's why I feel pretty comfortable with this one. And like consolidation, this is definitely something that happens with the Aussie as well, but I'll take that over, the other benefits. Any questions about anything else? But I wanted to just kind of share that, just to give you some options, because let's keep it real. You ain't gonna want to feel like trading every single day, like for real. Nobody wants to. It's just 100% every single day. You want to be, one with the chart when you do trade, but you may not get up and feel like trading every day. And I just feel like you still can be making money even during those times. Any questions about anything else? Y'all want to go over anything else? Want me to take a look at anything before we wrap up?
I'm good. I appreciate it.
You're more than welcome. More than welcome. I think so we all ready for the new system about to drop in these streets.
I've just gotten accustomed to this, so I think I'm going to stick with this for a while.
Yeah. I'm glad you said that too, because Doreen, you got to get out my head, girl. You're in my head. It's a great help too, because I got all kind of stuff going on up in this head. But what I wanted to point out too is this is not obsolete. Like this system is still great. It's still phenomenal. It still works. We can just use it. You can kind of compare, use one as a confirmation over the other and that kind of thing. It looks totally different. You all seen the new look of it all. Of course, you got the alerts on the other side. I think that is, it's going to be great. And here's the difference between this system and the new system. The new system relies on volume. Now, all of this is volume, but it's situated different. It just shows up different. Like on this system here, it shows up in the form of, like, we using the MACD. We got the volume indicators on the MACD, which identifies the volume. And then, of course, we have a lot of, well, I'm going to say busyness, but we've gotten accustomed to it. We've gotten accustomed to the triple arrows. We have our arrows. So that's another form of volume. Whereas the new system, you're not going to see any of that. But you're going to see the volume. It's just going to show up different as like a dashboard. It's going to be like a dashboard. And if you have buying volume, you'll see it coincide in 3 different areas, and he'll explain all of that or whatever. But that's what the measurement. That's how the arrow will be triggered when the volume reach a certain point. But that same volume reaching a certain point is the same indication that we get when we get the triple arrows and the MACD crosses. See, this volume right here, triple arrow came in, right? It crossed the MACD somewhere around in here, and boom, 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 boom. All that volume right there would show up down in this area as like these dashes, and you're more than likely, like this move right here, you'll see all red. It's going to tell you, oh, it's selling. And we basically, stay in the trade as long as, your volume colors are consistent. That's the overall difference in how it reads the market. It's just showing up a little differently. So we can still use this system here to kind of, confirm what we're seeing on the new system. And once we get it, I'm going to, incorporate the trading plan with that, and we'll take it from there. And I'm not sure if they had the support and resistance dots. Do anyone recall that? I don't know.
No, I don't think I remember seeing that either.
Yeah, see, I like my support and resistance dots. I like my support and resistance dots, but no, this system is designed to be simpler. And that's the key. It's designed to really be more simplistic. And so that's always a plus, because it's less stressful, right? I don't like stressful trading. I had enough of that. I want it easy. So with that, I'm going to wrap it on up, and we will get back together next week. Any questions in the meantime, I am here for you. Be more than happy to assist. And I really appreciate everybody's support in the group, participation in the group, being helpful to one another in the group. That's really what it's about. I like the intimacy of the group, but I do realize that it's going to get larger, and that's okay. I mean, that's a good thing too. But I want to try to keep as much of the, the team spirit as much as possible. I want to try to keep that alive. So with that being said, I'm going to call it a night, and you all have a great night as well.
Thank you. You too.
All righty. Bye-bye.